Are we still in a crypto bull market? I think so, and in today's video, I'm going to give 5 reasons why I believe this is the case. And there is no denying that there are some very valid arguments to both sides right now. I completely understand why bulls are bullish, but I can also see why bears are bearish. Sentiment isn't great, prices are dropping, people are fed up, but long-term investors should be looking at the bigger picture. So we're going to get into the 5 reasons now, but before we do so, I just want to make it extremely clear that the purpose of this video isn't to make you more bullish or make you change your bias or anything like that. I'm just sharing my opinions, sharing why I am still holding my crypto bags, and although you may listen to the information I share in this video, I do encourage you to still take responsibility for your own decision making, your own investments, and do your own research. Alright, now we have the boring stuff out of the way. Let's move into point number 1. And this is all about the moves that smart money is making. We're talking about Trump, Elon, and other big players, other institutions in the crypto game. We're going to go through a couple of X posts and articles now, just to take a deeper dive into this point. So, first of all, here we can see that Cointelegraph shared just yesterday that World Liberty Finance, which of course is Trump's crypto business, crypto portfolio, however you want to look at it, has continued stacking Ethereum over the past week despite so much panic in the market. And they purchased roughly around 1,500 Ethereum in the last 7 days. Furthermore, we've seen during this time that Donald Trump's son, Eric, he come out and said, buy the dips. Now, some people may see this as a top signal, but I'm looking at this more of Eric Trump doing victory laps in the future. He obviously knows a lot more than most of what is going on behind the scenes. He has access to a lot more information than us retail investors. So I think this is more so he can take all of the glory in a few months' time. And then the last one we're going to take a look at here is more about Elon and Tesla. We can see here around 3 or 4 weeks ago now that an article was shared that Tesla still holds all of their Bitcoin in Q4. Now this was around the time when Bitcoin was of course above 100k and they didn't sell a thing, and I just take all of this information in and find it very hard to believe that Trump is buying the top of the crypto market, that Elon failed to sell anything anywhere near the top. I think they know exactly what is to come later this year once the pain is over. So it's quite clear to see that big players, institutions are loading up their bags and positioning themselves for the long term. And no, this doesn't mean that they are buying your meme coins. They are focused on Bitcoin and other blue chip players in the crypto space. But to help these big players load up their bags at the best prices possible, they need to see retail capitulation. And this is something that I did a tweet about a few weeks back. We can see here that I said for a while that bull markets would become increasingly difficult for those who are very active. People who just kind of hodl and don't look at their bags day to day probably have an easier ride right now because they'll be less aware of what's going on, the big pullbacks and so on. Shakeouts will be more brutal than we've seen before. They will be longer, more volatile, etc. And many have a diamond hand approach, which means more needs to be done to cause capitulation. Now, we hear that saying all of the time, hodl, diamond hands, this kind of stuff. And if every investor is just tough as anything and doesn't capitulate, that doesn't work for the big players. The average retail investor is now aware of the typical crypto 4-year cycles. And if we see the same old shakeouts along the way up, even in bull markets, we know that coins can fall 20, 30, 40% for a couple of weeks and then recover. So something had to change here, and that is why I believe altcoins have took the thrashing recently to really shake people up. And there is no denying that altcoins, and even more so with meme coins, they have just been absolutely destroyed recently. And they kind of led the way, and now Bitcoin at a later date is following. Now, again, we know that Bitcoin in the past has fell 25 to 30% a number of times during bullish years such as 2021 and 2017. So again, with them 4-year cycles, what we are seeing now with Bitcoin, a top here at around 110k to yesterday's bottom is pretty much 25%. So although it sounds really bad because these numbers are bigger now, falling from 110 to 86k, it's still just the typical 25% pullback that we are pretty much used to. What hurts more is the damage done on altcoins, because most retail investors don't have much Bitcoin. They're all in on altcoins with a high risk, high reward approach. Moving on now to point number 3, and this is surrounding the Bitcoin Fear and Greed Index that many of you guys will be aware of. Now, I will admit I have not always been the biggest fan of this index in past cycles, but to be fair, it's been pretty spot on over the last year or so. Now, this is the Fear and Greed Index charts over the last kind of year or so. And we can see here that when the market made a top around March, April of 2024, the extreme greed was currently in at that point. It was at around 92. We fell off during the summer. Many of you guys will remember it wasn't great last summer. And when we did finally bottom in September, we seen the fear hit a point of around 26. So that was pretty low. Then of course Trump came in, we've seen a local top in December, and that is when the Fear and Greed Index was back into extreme greed with a peak at around 88. Now more recently we've obviously seen this fall off, and with Bitcoin really taking a hit this week, we've seen fear just fall off a cliff here to around 20. So lower than what we actually seen in September, and I think this really paints a picture of sentiment in the crypto market right now. So I really don't like calling for bottoms because I think it's a dangerous game, but I think this one will be very, very obvious in hindsight if it plays out. You have to keep in mind, whilst fear is at around 20 on this index, this is lower than the bear market. This is lower than when we seen FTX collapse, which really is quite surprising and quite insane that sentiment is so far down despite Bitcoin still being above previous all-time highs. Point number 4 is all about total market cap. This is a chart that I follow very closely when I'm assessing my macro high time frame views. Okay, so this is the total market cap chart on the weekly time frame, really zooming out, looking at the bigger picture. And if we go back to 2017, we can see a peak here of around 750 billion. By 2021, that high was closer to 3 trillion, roughly around a 4x in size. But we can see here that when we did make a breakout in Q1 of 2021, above them 2017 highs, and I'll just zoom in here, you can see that there was a big dip before we made a next leg up. Now this dip only lasted a couple of weeks. So going back to what we said earlier, this amount of weeks here is a lot more violent. It's lasting a lot longer. And I do believe that we need to see this for shakeouts to be more effective so that the big players can get what they want. So I've been paying close attention to a very similar pattern, and I've been looking for the 2021 high to hold as support. Now currently right now we are just below that level, but I'm not too worried at this point. I want to see how this weekly candle closes. If it closes up here, I think this is deviation, a fake out, and then we're ready for a next leg up. But looking at this from, just stepping back a little bit here, considering we nearly went 4x roughly from high to high, I'm not expecting that again because it's a maturing market and it requires more money, trillions, to move the market to the same effect. But I think to just kind of fake out above the 2021 highs and drop below, and this is now a bear market, I just find it very hard to believe that so little money will be injected into the market with these big players being involved, with talks of a Bitcoin strategic reserve and so on. So I do believe that this chart says it is not over and we can potentially run, I don't know, maybe to like 6 trillion. So just doubling rather than going 4 times this time around. I feel like that is a much more realistic outcome for total market cap, even if it takes a while to happen. Maybe Q3, Q4 of this year, we see that peak way higher. And finally, point number 5, many people will be happy to see this one on the list. It is meme coin, and more specifically Pump Fun capitulation. It's quite clear to see that many people are now getting fed up of meme coins, Pump Fun and rug pulls, even at the highest level. More recently, we have seen the complete mess of the Libra token with the Argentinian president involved. We then seen terrible sentiment around Kanye's meme coin launch and crypto scammers taking over his X account. And then we also seen rapper Rich the Kid pretend that he got hacked when a contract address was shared, and that coin only reached a 100k market cap, which shows that people are just not entertaining these obvious scams anymore. We've also got more evidence to back this up with numbers. We can see here on X that this account shared some analytics from Pump Fun after 6 months. The amount of coins bonded was 87,170. Only 4 of these coins at the time of the tweet were still above a $100 million market cap. Only 40 were above 10 million. But the really crazy statistic is that 79,000 of these coins were under 100k and were complete rug pulls. Now, to me, that is just absolutely insane, to be completely honest, but really not surprising. And if we have a look here, we can see that only 68 tokens graduated today from Pump Fun compared to 215 yesterday. So these numbers are drastically falling down because less attention is on meme coins. And even Jupiter is now doing 24-hour revenue above Pump.Fun for the first time in a while. Even I'll admit that I found meme coins very fun at first. I was trading them, but things just really spiraled out of control, and I think this cleansing was very necessary for the market to continue moving forward. And hopefully now we can see the utility season, the true alt season that many people are hoping for. So that pretty much wraps up the video. Like I said at the beginning, these are just my views right now. I do encourage you to do your own research and make your own decisions. Just one last thing to keep in mind is that bottoms often don't feel like bottoms. Things always feel like they are going to get much worse. The same way as when the market tops out, you think price can continue going, but it just doesn't. So definitely keep this in mind and ensure that you plan for all outcomes, because you never know if you are going to be wrong. If you plan, you are going to have a much better chance of success. But if you did enjoy the video, don't forget to drop a like and subscribe, and also comment and let me know if you are bullish or bearish for the remainder of 2025. Please trade safe, invest safe, and I'll catch you in the next one.